there's three things most critical in a junior. The first is the geology. If you don't have the right geology, it doesn't matter. You can have the smartest, greatest respect to Pete. It's not going to work out if the yaw is not there. But after that, management is the absolute key in juniors. And next to that is how they do marketing and investor relations. Because most of these things are burning matches.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with fan favorite Peter Grandich of petergrandich.com. Peter, thank you for coming back on the show.
Well, I'd like to thank all three of my fans for saying that.
Oh, that's not true. Alrighty, Peter, let's start out like we always do. And what is your macro view of the world economy and financial markets today?
So, in order to answer that properly, Steve, I have to go back a few years. A few years ago, I viewed the world splitting up and moving away from the United States, and I became a big believer in what's commonly known as the BRICS. And because of that, I became a huge believer in gold. And that really hasn't changed. People have asked, especially in the early days of Donald Trump, when he basically threatened the BRIC countries to cut off their knees if they don't deal with him. I think it's actually going to backfire his trade policy and actually benefit that belief that I had. So to start with, I am a huge believer in the de-dollarization and the movement away from the United States. It doesn't make me anti-Trump, doesn't make me un-American. There are several things I've liked what he's done, from immigration uh, to what he did in the Middle East. But I think he's made a grave error and played into the hands of those of us who believe that the United States will continue to lose its dominance on the world stage. So, from that perspective, that's where I stand. I do think the interesting part of what's come out of this, which didn't get a lot of fanfare, but it'd be interesting to see how it develops. And that was Japan and China going in the same room to talk about an alliance. People don't understand, if you want to know two mortal enemies in the world, those were those two. And yeah, they were, because of this, along with South Korea, forming a new pact. So overall, I think the United States certainly better off now than it was the past 4 years and what's been transpiring and the things we're learning. But I still think the United States is slipping and sliding and losing its once dominance on the world stage.
Okay, so um, a while ago you saw BRICS coming, and that steamroller is just keep going, and that led you to the gold bet, which has paid off handsomely. The Trump's plan seems to, although we're better off than we were 4 years ago, Trump's plan seems to be backfiring. De-dollarization is continuing as you see it, and recent news on that is Japan and China sitting in the same room and talking, whereas that probably wouldn't have happened a few years ago.
Yeah, so what they're doing is, but this is part of Trump's history, is he throws out a huge number and then, okay, we won't charge 70. You guys agree to 10, that's good. Where he might have was willing to take 10 to begin with. We don't know. I do say that what I think is clear and obvious, if people are being realistic and eliminating their personal beliefs, I think he believed the world was going to beat a path to his door right away, and it didn't. And so I think what we'll learn in the coming days and weeks is the numbers that were tossed around earlier and how severe many thought it was not going to be the case. And the simple fact is there'll be a continuing movement away from the United States. And it may take several months for people to come to that conclusion. And one of the ways we're going to know, Steve, is the BRICS next meetings take place in a few months. And depending on how bold we see they are, because the one thing you don't want to do with Donald Trump, you don't want to get into a war of words. You're going to lose. And they've been smart enough, all the countries, to lay low with that and not get into that. Even the other last night when he talked about Canada is considering willing to come the 51st state. I don't think anybody is really thinking that, but it's the way he uses those type of comments to help what he believes is leverage himself to achieve what he's looking to achieve. He's done two great things. You cannot take away the immigration and the Middle East process, but I think he stumbled and will fumble on the trade war.
Okay. Alrighty. Macro view here. Greg wants to know. He says some are predicting a market crash. Peter is not. What are you seeing or not seeing that is different from 1987 and 2008?
Well, Steve, let's always remember that guys like you and me that look into a crystal ball for a living, the only thing we become experts is how to eat a lot of broken glass. So I gave up years ago trying to think I could predict the future, but I can say that he's right. I am not in the camp where suddenly I think we're going to wake up one day and we're down 50%. Can we go down 25, 50% over several years? Yeah, that's possible. What I think is more important is the attitude is capital preservation now to me is more important than capital appreciation. I don't think the stock market has the ability to make the type of gains it made over the last couple of decades. Doesn't mean it can't eke out a single digit return positive, but I think the problem with that is, at least from my planning group, where I continue to see American families, 7, 8 out of 10 still live beyond their means. They're spending more than they make, and they're hopeful that the market keeps offering superior returns, which I don't think is coming. In terms of difference, 87, which was the claim to fame of, forecasting that and wanting the firm that I work for wanted to fire me, and if I didn't retract that opinion. The difference then was that was a market that came not only from much lower levels, but it was really driven by a computer program that went out of whack and caused a lot more sharpness down that particular day. 2008 was a very serious uh, market decline and a world crisis, and we didn't learn from it. We're right back doing the things and all the type of errors and taking the risks just in different areas now and all. So if there is another financial crisis to come, I don't think it's a crash in one day, but I do think the opportunity to make large scale gains, at least in the US stock market, has passed. I think at best for a few years, we may eke out either side of even, and at worst, we can have double digit losses.
Okay, I'm going to show a visual representation of that here because charts are like catnip to this audience. So right here is the 1987. That was a pretty waterfall sell-off right there, which you called, right? I mean, I wasn't old enough to know this, but you called right before it happened. And then the 2008 one, this one was also quite a waterfall sell-off, but you're saying that this one could have kind of more of a although we don't have monumental gains baked in, you could kind of see it doing one of these sideways or something and just not making anything.
A sideways to slightly lower bias, I think
Okay.
is
Okay.
I'll put it this way. I'd be surprised and wrong if we had double digit returns from here over the next 12 to 24 months. I think at best we're on either side of even. And if things start to turn bad, which is possible, we could have double digits, serious double digit losses. What I just don't think is we're going straight down and collapsing as some people like to talk about market crashes and all.
Okay. All righty. Uranium and nuclear energy. Our mutual friend Lucian over at Triangle Investor, he says, please ask Pete what uranium companies are on his radar.
Well, I'm happy for him and some of the other bulls that have been staunch bulls for the last few years. About 6 to 9 months ago, their followers and subscribers wanted to kill them because they stayed so bullish. But it paid out, it paid off for them because we've had tremendous rally. So got in uranium at such a low price on either side of 20, rode it till just above 100, saw anywhere from 100 to 500% gains in stocks, took those profits and stayed out until in March when I put out, I believed that there was still another 10 to 20% decline in these things. I gave certain price levels if they came down to, and I think I gave 7 or 8 stocks, of which 5 or 6 came down to those levels. And effectively, people would be long from there. Now, since that time, which was April 7th, when the days were low, so in not even 2 months, Steve, they're all up an average over 50%. It's been a great move here. So what I decided last night to share to those that might have done that is, hey, don't look at gift tossing them out. I'm not looking to sell them because I still think over time they can go a lot higher. But this has been a huge move in a short period of time. Don't chase it if you're not in. And if you're in, protect yourself with stops. We don't want to give it all back again. So, about 50% lower or 50% lower of the move, put a stop. If they move up some more, move up your stop. So we walk away with something. But I think never has the argument of to want to be bullish on uranium has never been better than it is right now. So these things should most likely move higher, not lower. And the corrective phase that we needed to have when just a year or two ago everybody was launching rocket ships and we're all going to the moon. Just remember this one caveat, Steve. I know you know it, but to the listeners, this is an industry where there's only a handful of producers. No other metal has that uniqueness. Any other metal, we could point to dozens, if not hundreds of people that find it, produce it, and sell it. And I believe you need to be overweighted in those that produce it and or own the physical versus the more raw, pure exploration companies that a lot of them, even if they're fortunate enough to find it, they may miss this cycle before any of that uranium can come to the market. So I would be overweighted, and I use Cameco as my bellwether. I believe that should be in most portfolios if I were still a portfolio manager. And I think it's the bellwether. And they seem to have a still quite bullish outlook. And their stock is just a couple of dollars away from another new, 52-week high. So I think overall, I'm glad to see our friends like there and others that speak highly about it and were believers and stayed with it. They didn't cave from the pressures of people sending those hate mails, which some of us I know are used to getting, and our name being torn apart on some chat forum somewheres by these Keystone board warriors. But I think uranium has still got a lot of upside left in it.
Okay, I'll toot your own horn for you here, Peter. This is here's Cameco, the one you're talking about, and you came out with your letter when the price point was down around here.
Yeah,
And since then, we've just had a monumental run, and now we're tapping on where we were not that long ago. And this is the warning that you're putting out, like, hey, maybe it's time to put in a stop loss order, 10, 20, 50% down. Just make sure you lock in something so that
right.
you don't ride this thing back down and get nothing out of you for being so smart.
Yeah, but other than approaching a previous high when there tends to be resistance, the future, even the technical argument is still very bullish. You could argue that that's a W being formed, which is usually a bullish formation for longer term, and they're just an excellent run company. I wish all the companies I've ever invested in had the similar type management the way these guys have run Cameco for several years.
Yeah, yeah, yeah. Thank you for the shout out recently on the show, on your show. I mean, I appreciate that. It at first the hate mail when stuff that I was in was down kind of got to me, but I've since learned to use it as kind of a bellwether, and it is a very very good indicator of letting you know when you should be buying and probably when you should be selling too. When you see a bunch of rocket ships on Twitter, might be time to take profits. When you get hate mail in one of your positions, might be time to double down. Get more.
Hate mail is one. Listen, we should stand for people like us that are out speaking in the way that we do. We must minimally accept constructive criticism. That we're people are allowed to it. I allow it. When the times that I speak with the public and all. But when your basis, for instance, I may have talked about 20 juniors, and two or three of them have really bombed. I mean, they stunk up the place and all. And wherever you go, they come on and just bring up those two and three, and they never speak about the great things that you did and all. But when you get it so apparent, like you said, there was days when you open up, it's just one after another. And that sometimes I wonder if it's just one person with 20 different names. But the bottom line is, more times than not, sentiment is an important part that plays a role in decision making. And when you see that and it becomes so paramount, especially when the fundamental argument, the argument for uranium didn't really change. It didn't suddenly become an excess supply. We didn't see all of a sudden demand falling off the cliff. It's just that they got too far ahead of themselves and there was too many people bullish on it. But people don't want to use the one place they should go to find out the reason they're down, and that's called the mirror. They don't want to look in the mirror, so they choose someone else to take out their own personal frustrations on, and that's comes with the territory. And in my 42nd year, I wouldn't say I'm used to it, but I know what it's like.
Yeah, yeah. Okay, thank you. That's good advice. I got a ways to go. Okay, Robert wants to know, have you heard of Light Bridge technology and their nuclear fuel Light Bridge, which is supposedly much cooler and more efficient than regular nuclear fuel? Do you follow them at all?
Oh, I have no idea about that. Sorry, Steve.
Okay. All right. And moving on to copper. We know you like copper. Ombre wants to know, I love that name. Rio Tinto resolution mine construction case was just rejected by the Supreme Court, enabling the construction to go forward. What do you make of this? How does this affect other mining opportunities in the U.S.?
Well, it was a unique situation. It's been going on for years. It's good that it's been hopefully resolved. It does demonstrate those of us who have an argument that this administration is far more behind mining, and obviously people concluded now that the need for metals is acute in many different areas, and that a lot of countries, even the United States, especially on critical minerals, doesn't have the supply to assure themselves of the future, and those who do have it aren't exactly our best friends. So I think it's just a positive for key mining states, particularly the one where this project is. And I just think it's just an overall part of the atmosphere. I mean, I've listened to some uh, Canadian mining executives to where mining would have stopped 10 or 20 years ago if there was one little turtle on the project, and they would say you can't do anything. And now the comments from the political side of supporting mining, it's almost unbelievable the 180 degrees of how it's turned. So I don't think political woes are going to be concerns, at least for the next several years, because these countries realize they need to come up with a lot of new metals.
Okay, well that's encouraging for Arizona. That'd be really cool. I don't own Rio Tinto anymore, but that could be a pretty. That's a huge mine, so that would be a big step in the right direction. Okay, platinum group metals. Rasputin wants to know. He says, "What are Peter's thoughts on possible platinum and palladium prices in the next 3 to 5 years? Do you see the possibility of gold correcting to 23 to 20? Well, let's start with platinum first, then we'll go on to gold. What's your view
Well,
on
I
platinum?
don't follow it enough to offer a qualified opinion other than for a good part of my career, especially when I was a manager of money, platinum always had a premium to gold. Now, I think some things changed. Obviously, the gold argument is so much bigger and better than it was, but I don't follow it enough. But the interesting thing, and maybe when you do have an expert that follows it to ask is, much of the platinum that used to be so important to have because of the converters to cars and all came from an area of the world now that's just deteriorating immensely, and that's South Africa. And so, without South African production, I can't even imagine what the potential loss could be for a lot of platinum supply. But that's to the extent of what I know it, Steve. Any other comment would be just based on guessing, which I don't really want to do.
Okay, okay. I am having a platinum expert here on in about a month, so we'll get to pick his brain, and I will ask him that question. Here's what you're talking about. So this was kind of in the early 2000s, and it basically took platinum. I'm sorry, two gold coins to get one platinum coin, and now it's the opposite. It takes three platinum coins to get one gold coin. So that's what you're talking about, right? This
Yeah.
is what it was like for the majority of your career, and this down here is something that we haven't seen before.
Steve, would you believe it? I can remember being at a PDAC show going, boy, if gold could just get above 350, we could start doing well. So when it's 3350, it's amazing for someone that's been around as long as I have been. But you're right. That was the time when platinum used to have much more premium over gold.
Yeah, yeah. Okay. Okay. And second part of his question, do you see gold possibly correcting to 23 to 2700 per ounce for one last chance to get in if we see a huge broad market correction?
Well, first of all, if what he means in terms of a broad market, if he thinks the equity market comes down, does that cause gold to go down? I don't think that's the case. The difference in this bull market in gold than any other bull market that existed in my 40 years is the movement has been in the physical side, not the paper side. And the paper side is far weaker than it used to be and how it would affect the gold price. That's one of the most important things to understand. My opinion was a few months back when gold got to 3,500 and the 200-day moving average was around 26, 2,700, the spread was too much and there would be a corrective phase. We had it, but we had it in a very mild and productive way. Right now, you can bring up the 200-day moving average. I think I checked this morning is around 28.75. So the spread between where gold is and that moving average is shrinking. You like to see it
There we
shrink
go.
some more. So
28.35. There you go.
so a more sideways here, the better.
Yeah.
If if you're like me, and I think you and others who think 4,000 or 5,000 is a legitimate target now. Uh, so I don't see how it gets down to that level based on a stock market crash. I also, because the physical market is so powerful now, and we're seeing all the right things happening. The trading has moved out of London and New York and more Asia. We're now seeing, and this has to do, by the way, with China and those that see the brick movements going forward. And eventually, as I said, it's still probably a year to two away before we see some sort of gold conversion in their trading systems, whether it's among themselves or some sort of new type of currency they may come up with or whatever. But healthy wise, I don't see gold much below 3,000 in worst case scenario. In fact, I see some sort of trend line that you have there that goes through that. That'd be the worst possibility that I see of a decline.
Okay. There's a whole bunch of us technical analysis guys that all have this same line drawn. And I wasn't the one that found it, but we're all looking at it. And this is the one you're talking about, this long one that goes back to 2016 right there. And you
Yeah.
could see that as offering major support and unlikely to get broken.
Yeah, and the longer we go sideways here, what's been interesting is the shares are actually still moving up even during this decline,
Yeah.
something not seen for a while. So it's healthy for gold to trade between 3,000 and 3,500 for several more weeks or months, especially if you want to see it eventually at 4 or 5,000, because it'll have a foundation that it can go through without being seriously overbought, which it was. As you can see how high it got away from
Yeah.
the 200-day moving average. And there's a lot of believers that when there's a certain percentage of a market away from its 200-day moving average up or down, there's a reversal.
Yeah, yeah. I mean, we can just look in the RSI and the MACD down here and go way overstretched. And then, yeah, I could definitely see this just going sideways until maybe even the 200 moving average caught it, and then we're off to the races, which would take, probably a few months from now. But okay, awesome. Um, and stock decisions and strategy. Okay, Culpin wants to know. He says, please ask Peter to discuss board members who won't buy their own stock, voting themselves free stock options instead. Wouldn't a good board chairman and CEO shut that down? If not, what should shareholders do?
Well, I think he's addressing a certain company that I've been heavily involved with and been outspoken about, and he is right. Uh, I believe it's tough enough for individual shareholders to have a real say, especially small to mid-sized shareholders. It's even tougher in the junior resource market because there's A, just a small handful of people at those type of companies, and B, most of the people that are in that are gambling and in a sense don't consider what a stock used to mean, being part ownership of a business. I've always viewed it that way. And I always viewed that a board and management are at the behest of shareholders who vote a board to be qualified to be in, and then are good enough to choose the right management to run day-to-day things. And if that's not happening, then we as shareholders really have one exercise only that can correct that. And that's when we get to vote for board members and all. So I watched a particular company where they didn't even own 1%. In fact, if you take out the recent new CEO and chairman's purchases, the board has basically nil in stock. And then the one person who did own stock has just announced they're not going forward to stay on the board, to be nominated. Yet they just granted themselves all options and these other type of rights that are basically free stock. And they even gave it to a guy that's going to be gone in a month. And that
Wow.
to me is not acting in the best interest of shareholders. And so my advocacy has been is listen, we only have one chance to hope to correct that, and that's the voting that we all get a chance to do. And most people sometimes you watch that you don't even get 30% of votes in junior stocks when they tally up of all the outstanding stock and all. But this has been something that I spoke a lot. It was until most recently the single largest holding of mine. And the biggest frustrating part of it, Steve, is from the expiration side, they couldn't have been happier. They just had news yesterday that again from an expert, and that's what actually kept me in. I probably would have not had the biggest slide because I would have jettisoned it a long time ago. And that's why I think it's more critical than ever that the proper type of management or the way if the management's going to be. And let me just close with this, Steve. There's three things most critical in a junior. The first is the geology. If you don't have the right geology, it doesn't matter. You can have the smartest, greatest respect to Pete. It's not going to work out if the yaw is not there. But after that, management is the absolute key in juniors. And next to that is how they do marketing and investor relations. Because most of these things are burning matches. They don't have an asset yet. They're not producing cash flow. They have to keep raising money. So you want to enhance shareholder value to the maximum, not fraudulently, but the maximum. And the way you do that is you have to have a proactive and talented and skillful investor relations and marketing. And it's clear to me and others, even watching a video yesterday, that at the nicest way you could describe it is amateurish. I have other words, but we'll leave them out in this PG interview of ours.
Okay. That's interesting what you said. So board and management are beholden to shareholders, and they basically, I look at it the same way. I don't remember where I learned it, maybe from you, is I look at it like you're buying a piece of a business. You know,
You
you're
are.
taking a percentage of your net worth and you're entrusting it to these other people to, you know, put love, care, and attention on it. And you're trusting that they're going to work 60 or 70 hours a week to make you successful. And if they're not doing that, then, you know, look at it like you're buying a piece of a business. You know, if you're buying shares in Coca-Cola, you're buying a piece of Coca-Cola. And the top three things that you look at in order are one, geology, number two, the people in management, and number three, how is their IR? How's their marketing? Are they getting the word out to people?
And four is a hard lesson that I learned through this particular company, which now, if I'm still alive and doing these things a few years from now, when management has little or no of their own dollars in it, there just seems to be not as good attentive and things you would hope to see versus where companies have 25, 40% in all. You and I were talking about a company, NorthIsle Copper and Gold, where almost 40% of the stock is owned by six insiders. And the CEO less than a year ago basically, I think, took much of whatever money he had and exercised options that weren't even in the money yet because he felt that there could be a big tax bill because he sees this huge gain and he would save money doing this. When people have their own money, hard-earned money, not that they got to buy the stock at a penny when it was trading at $3, when they put hard, real money in it, there just seems to be a better effort, just net net. And in this particular case at that company we're talking about, they don't even own 1% of the company. And that was another hard lesson to learn.
Yeah, I learned the same thing, and I start looking at that now as I look to
Oh,
see
it's
how
an
much.
important part now going forward for me, I can tell you that.
Yeah, look and see how much the CEO owns, and I do it in relation to what is their annual salary and how many years of their annual salary do they own in stock. And sometimes you'll find that these guys own like 2 months of their, so they have no vested interest in the share price performance. You know,
You
they're
use the
not.
right word there, a vested interest. That's what I think it's important for people to see that management, which is the board, including, has a vested interest.
Yeah, yeah. Okay. Follow up. basically, he's a fire dude is asking, maybe he's a fireman, is asking, how could you please discuss how and when you would go about deciding on selling a long-term loser?
Just taking that other company spoke about when the original reasons are no longer justifiable. And that's what didn't happen at this company. We got involved in this company because we saw such great exploration potential, and that has not failed, even though the stock has declined almost 80% from its high, which is makes it doubling frustrating. I think when you no longer can justify your original reasons, no matter where it is, you have to move on. And some of the questions I used to get when I was a money manager is, well, you guys on Wall Street always, and guys and girls, when I say that, you always tell us when to buy, you never tell us when to sell. And one of the ways that I always used to say, and I still do it myself, is if I couldn't first buy it today, irregardless of what I paid for it in the past, then not only why am I staying, but who do I think is going to come along and pay more for it? If I think I know everything I need to know and I couldn't bring myself to buy it today, why am I still in it? So that's another reason to look at it as well.
Okay, when the original reason to own it has gone away.
And you can't replace it with an equal or close to equal reason to still own it.
Okay, you can't replace it with an equal or still equal reason to own it. Okay, you just talked about this one. Let's hit on it. NorthIsle Copper and Gold. Hi, Peter, big fan. I know you're a big holder of NorthIsle Copper. Could you just speak to why you like them so much and if they have agreements in place with the government and indigenous groups in the area? So they're up in Canada. It's important to have agreements with the locals there so that you can get anything done. Maybe speak to that.
Sure. Well, first of all, NorthIsle Copper and Gold is the exact opposite of the other company that I was referring to. They've done everything right that a junior is supposed to do. All the things that we just spoke to have check marks on, they do it with flying colors. In fact, I believe they should be an example of the 1 in 100 that does make it and go all the way. It is my largest holding. Uh, they did very smart things for what you asked about. They delayed expiration, I think about 2 years ago, in order to make sure they had all their workings with local people and politicians, indigenous, all of that, and signed, sealed, and delivered. And they did that. And they have tremendous support in that area. And that's always critical. Can't tell you how many projects have run into problems who try to overlook that and not really pay too much attention to it. So it has all the earmarks going. As I said to you before, about 40% is owned by management and board. It has already 7 million ounces of gold and 3 billion ounces of copper. And I don't think they scratched the surface onto what they still have as exploration potential. Three, it's the two metals that you really want to own right now, copper and gold. Four, it's in a very well supported area in North Vancouver Island. History of mining, everybody that's around it is being seen and showcased of supporting it and going forward. And it really has a brilliant CEO. But recently, the icing on the cake for me, and this was personable for me, but it made me feel good because of the position that I took weeks before that. A gentleman named Alex Davison joined the board, and I went back with Alex over 30 something years. He was head of all exploration for Barrick worldwide for a lot of years. When I tell you, not only one of the sharpest guys that I was ever around, but a no nonsense guy, and my feeling was if he joined the board here at this point, at his age and all his accolades, he's in the Canadian Hall of Fame mining. Person like that joining, and which he allowed the company, quote himself, and bought stock in a private placement. He said it's world class potential, and that was the icing on the cake for me. And it's so far as you and I speak, it's behaving that way. It's again made another new all time high this morning. Our original involvement started at 15 cents this morning to trade up to 95 cents.
There we
Probably,
go. Oh, you're talking on the TSX.
yes,
Yeah.
that's where, much of the active trading, but you can look at the US price. It's the same. You're going to get the same type of
Same
looking
type
at
of chart, all-time high today.
yeah. And one thing I want to say, Stephen, I know you like charts a lot. Charts are a good supporting mechanism in juniors, but most juniors are going to succeed or fail purely on what they do fundamentally. So a chart shouldn't be the only reason. It should support your fundamental argument, whether to buy or sell when it comes to junior resource stocks.
Yes, a lot more people are looking at the stock chart of the S&P 500 and the Dow Jones Industrial Average than they are at a $100 million market cap company where one guy can influence the price. And sometimes you're the only guy buying that day. You know, you press buy and you realize all those shares that took place were yours. So the chart doesn't mean as much as it would otherwise. Okay, so for NorthIsle, they did as going into what you were saying about the indigenous groups and making sure they got local support. They even delayed exploration for a couple of years just to make sure that they had.
In a couple of years, but it was several months to get all that in place.
Okay,
And
2 years ago this happened, so they delayed by several months to make sure they didn't waste money drilling and they had
oh,
support.
you didn't want to, that's what's happened to some people. They go and drill, and then the engineers said, well, we never agreed to such and such. And not only did they agree, but in everything that they do, anything that takes place there, they stand proudly with them, along with government officials and all. And I'll just tell you this, every facet that you would want as a check mark for a junior, that company has. And it was a lesson. It doesn't mean it's guaranteed to go. There are a lot of things that happen in mining that are out of your control. But I think it's one of the reasons why it's been one of the best performing. And as been clearly stated by the CEO, by Michael Gentile, who's a big shareholder, and others, it's probably, at least in North America, the only major potential world-class project right now. As I told you, 7 million ounces of gold already, 3 billion pounds, that a major has no interest at this time. So what I would hope to see, and hope is a great spiritual strategy, but it's a horrible investment strategy. So I wouldn't go just on this. But I would think anywhere north of $1, if they announced that day, well, we just sold 9.9% to one of the top 25 or 50 mining companies, and with that, we'll be able to now drill everything we want to drill. Then I believe we are rounding third, heading for home. Doesn't mean that's the only thing that's going to make them successful, but that's what I suspect is most likely in the next 12 months, that a major here is going to want to try to get some influence on this project. And the way the company would accept it is no first right of refusal, do an equity investment, become a 9.9% owner, and then take that money and some of the expertise that you would hope that that major shareholder brings. And I'll say it this way, drill the piss out of everything that you got.
Okay. All right. You like it also, going back to what we were talking about before, the geology is good. They've got 7 million ounces of gold, 3 billion pounds of copper and growing. 40% is owned by management. That checks box number 2 and 4. And great marketing. I interviewed the CEO. I kind of wish all my interviews were like that.
That's what I was just going to tell you. I mean, and the guy's out. I don't think 3 days, 4 days passed where he's not at a conference, some political thing, whatever, on somebody's interview and all. And then I look at that other company we spoke. It's night and day and all. And also, they have two, not one, but two Hall of Fame miners on their board. It has all the check marks. Now we hope the propelling that's happening now gets into that final stage. I can just tell you this, gold and copper, those are the two metals that you want to have now. And what makes it real interesting for them is they might want to actually, they're not going to, but you want to switch the name here because they'd be better off for this time being called NorthIsle Gold and Copper, because it's the gold that's going to be mined first there, because it allows them to lower capex by a lot and then set up to the expansion of this. And we haven't even talked yet about a discovery they made that already had about a dozen holes in it. It's not in the current resource. There's a huge project that's what you want to attract that major for, who has deep pockets to go after. It just has everything you would want to have and tells the story professionally, often, and with clarity. And again, I've seen the opposite, what that brings. So again, this is an example to go by, to look for if you can find others like them.
Okay. Sean has a follow-up question. He says, could you ask Peter what he thinks the ceiling price is, price per share or market cap for North Isle Copper and Gold?
I don't know if you can put a price. I think what you can look at now is you can look at some of the valuation that we could take on its PEA recently and compare it to others where it's trading only about a third of others. So you could make an argument it can double or triple and not be overpriced compared to where other prices are being valued at. But the particular number here is that's just, pie in the sky, picking a number. But I do think it's still greatly undervalued given given what we already know they have and what we suspect can happen over the next 12 to 24 months.
Okay. Yeah, tough to bet on a drill hole you haven't seen. Okay, Radisson Mining. We know you follow this one. XCO wants to know just overall macro thoughts on Radisson Mining.
There again, take out the checkbook. Phenomenal management. The gentleman who came in just about a year ago in July, what has occurred since he took over as CEO has been nothing short than sensational. Excellent board. Management owns a large stake, and they've had just great success in drilling, and they have a unique situation, almost certain. In fact, I don't think the company even considers it any other way. Eventually, one of 7 mills that are currently within easily trucking distance of their project is going to be used to develop that project. And most likely in an acquisition or merger, not just to have the ore run through. Why should that mill watch the ore run through and let these guys make all the money and just make a few dollars per ounce on running it through? And now, because of recent discoveries, just almost blind drilling on the assumption that there was a much bigger gold pot to go after, the first 9 holes, all 9 holes, drilled deep in different areas, found mineralization. So they went out and took more money in that was offered to them, and I'm glad that they did. And now going from a conservative speech by the CEO this time last year when he first took over, yeah, I think we got 1 million, we may be able to double it. Now they openly speak about 3 to 4 million ounce potential. And they have a right to because of the success they have and who they are. Again, a well-qualified board, a board that has put its own money in real prices, including the most recent placement, and a CEO that's been buying in all. So again, that is a story. And that one is probably one of 2 companies that I'm involved in that are likely to be merged or taken over in the next no more than 12 to 24 months.
Okay, all right. You're attracted to the management and the board, and both of them own enough stock that they have a vested interest. They have several mills in the area that could be used, which would also could forecast that they might be taken over by an acquisition. And the size of the prize is big enough, 3 to 4 million ounces of gold, which is certainly enough to.
Yeah, so they did a deal with I guess called subsidiary or whatever of IM Gold with a mill that's nearby that's hungry for ore. So one of the things that I'm speculating on there, this is my thinking, not that management has denied that this can't happen, but that project and Radisson would be merged into a new public company because that's really the best way that they'll get leverage in their ownership versus just a one-time sale. And so whatever it is, one of those mills or more is going to want to have this ore. That's what we're speculating on.
Okay, all right. And Sean has a follow-up crystal ball question. He said, where are we here? Oh, Peter, what price per ounce do you think Radisson will be bought out for?
Well, if you talk about ounces, such high grade that they have here, the numbers that I've seen discussed, maybe the lowest end is $75 an ounce and a high of 150 to 200. What we got to get used to, and this is what's still hard for us that've been around the block. We got gold at 3,300. And I still see companies that have well under 2,000 as their average cost. And everybody keeps saying, "Oh, well, gold's got to come back. It's got to come down. It's got to come down." I heard that about the Dow when it first broke above 1,000, because for 13 years it traded between 700 and 1,000. And in the early years of my career, people kept saying, "Oh, it's coming back again." It doesn't stay above 1,000. It doesn't happen. It got a lot higher than 1,000. Not saying gold's going to 20 or 30,000, but I do think because it's such high grade here, quality ore as well. I don't think there's a metallurgic argument anymore. They could get the upper end of a valuation well above 100 to maybe $200 an ounce. So if they find 2 to 4 million ounces, you do the math. And then, you come up with 200 to 400 million value. And then you take how many shares and what they're selling out now, which is what I'm trying to think, it's maybe 100 million or less. There's a triple still ahead in the company.
Okay, we like triples. We like triples. Peter, maybe wrap up, and this is just kind of a personal one. No one else asked this, but I've been getting a lot of questions. I feel like my generation is starting to see the writing on the wall of Social Security and Medicare and the inability for the Ponzi scheme to continue. Maybe give us your thoughts on that to wrap up.
Yeah, well, I'm glad to, because that's where I spend more of my time on. I'm still part of a financial planning group here, and the group has over 1.6 billion dollars in asset management. So we're not just, few couple guys, and we've been advocating that. I certainly been that. Steve, how old are you, Steve? If you mind saying that?
45.
I don't think you'll be. I don't think that what we know Social Security to be. I don't think you'll ever collect it. Now, I'll tell you why I think that way. One, we all know the arguments out there now that in less than 10 years, the math is there. It runs completely out. And so some of the things that have been discussed, but no one wants to touch the third rail yet in politics to do it, and that is to raise the age before you collect it, and then also dramatically low how much you make that you can still collect it. And I think if you do make it to 60, and please God that you do, if you do make it to 60 or 65, by that time it'll be 75 to 80 because let's remember, age is also, we're living longer, so that has to be raised. And if you equal to whatever dollars are today, if you're making more than 200, 250,000, they're just going to say this now has just got to go to the very, very poor people that need it and all. And then the Medicare and Medicaid, we couldn't wait 20 years ago, because I always paid basically for my own medical insurance. I kept saying, man, I can't wait to get Medicare. I won't have to pay. Just more and more is going to come a cost. And that's why the younger generations are very concerned that they are not going to be able to retire, period. I've written about it. There's some great writings I put out recently. I know this is a very short period we have here, but I would tell you that the things that we were kind of certain of, a boomer like me that's 69 years old now, a man of 45 and younger especially, I would not count on. I would make sure that I am working on an alternative solution, and not to be dependent on government to support me in some sort of style, medically and also financially.
Yes, the Ponzi scheme cannot last forever. We have less than 10 years before Social Security runs out on the current scheme. I remember doing I've been playing around with ChatGPT, and I was asking it questions on this, and it said, well, basically the problem is what we already know, is that when Social Security was started, people didn't live long enough to collect it. It was only about 1 out of 20 people lived long enough to actually collect Social Security, and now it's almost everyone. And so the Ponzi scheme cannot continue unless, like you say, you raise the age or just get rid of it.
They made two mistakes, Steve. They didn't think to the future, just like people that built roads, or we have tunnels that go from New Jersey to New York. It's 2 lane. Well, back then there was 1/20th of the population. We had nobody realized now there's 10,000 more cars that want to get through. Same thing with this. They didn't realize not only the age, but that we would start to decline and not as many people. You used to have 20 people kicking in for every one person that was collecting. Now it's less than two. And now we're seeing this dramatic fall off. And that's the other part. The writing that I actually did was called a retirement and aging crisis, because here's what's also going to happen. Guys 10 years or 20 years now that are your age now are going to look at, say I'm still around and Grandich is 88, and he wants to go get like a $500,000, $1 million operation to replace my lungs or whatever we're doing. And then some young guy that can barely get by, that's getting taxed out of heck to keep this supporting system, it's going to go, let this guy go. He's collected all this money. He's lived a life. I can't even put food on my table. I can't pay this. We're going to have an aging battle, the battle of ages, as well as classes and also the finances. And remember, Steve, 2/3 of Americans are working paycheck to paycheck. They ain't never, unfortunately, going to reach that beautiful thing that the financial service firms love to run the ads on. This retirement where you live your last quarter of your life in some sort of luxury, doing all the things you always wanted to do. 2/3 are never getting there because they're not financially able to get there. And they're going to be calling on the government to do more for them because it's going to be more challenging to do what they do. Trust me, at 69, it's a lot more challenging day to day now for me than when I was 39. And that's the other battle that's coming. It's not tomorrow. It's not a reason that's going to impact the stock market. But if you're thinking out a number of years, we are definitely in an aging retirement crisis. And throw in two other things. We have an infrastructure crisis. We should talk about that sometime on another show. That's really severe. And then the impact and cost of natural disasters. When you throw that into all the other things we normally discuss during the course of a day, Steve, it's why I have such a very bearish outlook in terms of economics and markets here in the United States, at least.
Yes. Well, thank you very much, Peter. If people want to get a hold of you and follow your work, how can they do so?
Well, they still do after those last 5 minutes of discussion we had. I'll be impressed. But uh, obviously, I have an X page where I do most of my communications. I have a YouTube channel with gentlemen like you who not only interview me, but I get to interview. And then there is a website, petergrandich.com, that explains everything, including our financial planning group.
Awesome. Thank you, Peter. We will put all your links down in the show notes, and you guys can follow him over there on Twitter, YouTube, and his website. Peter, thank you for coming back on the show.
Thank you. God bless you, Steve.
And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful rest of your day.